All right, good morning. Welcome to the New York session. I hope you're doing well. Okay, so let's start with the dollar index. All right, so as you can see, yesterday, what I was expecting over here at the 50%, that did not happen, where basically they manipulated and then drove down aggressively one more time, which in my opinion that is fine. That is normal when price is going up. You anticipate the reversal and then sometimes they can fake it out. But if you look on the daily, on this side, we are still bullish. Okay, now I think, let me take this one away and then highlight this inverted fair value gap over here. That is where price is reacting off from, and so far it has rejected. But do we continue or do we come back down again? Because this high to this low has now also become a range on the H4, so we might struggle in here to go up. Now where we've come to, which is that OT area, I don't want to see a continuation to the downside from there. So I'm anticipating that it will go up from here rather than reject this fair value gap and then go down and take out this low. I could be wrong, but so far, because of the daily, that is my expectation, a continuation to the upside. Okay, so how we trade this New York session is going to be key. During this New York session is going to be key as to how price is going to continue going forward. So I'm not going to predict, but I'll be watching how price is trading inside this gap and then the up candle. Now if you drop down to the 1 hour, again, that's a New York session gap, that's the last up candle, so it's a strong resistance area. Therefore, if price is able to trade through it, then we might have something here in terms of continuation to the upside. What is encouraging is the fact that when market opened, we gapped down. Okay, we gapped down and then we traded through it. Now not sometimes, most of the time, these gaps are supposed to be traded through. They are not supposed to be traded through, as in if we gap down like this, we open, we pull back, and then we go down again. But price seems to have gone above it, so that might be something price might use in attacking this high. Okay, so let's see how this New York section is gonna trade. Hence, I will not say go and sell euro or sell pound, but keep an eye on it. They might offer a potential trade idea. Okay, so euro, from the weekly perspective, I think you all know we have an immediate close, so this is just a pullback. Okay, so on the H4 time frame, we want this down candle to now give up. If that down candle gives up, then we'll be looking for lower prices. So far so good, we've closed through this fair value gap, so that's a good thing. But then again, I still like this down candle to give up. Or if we drop down to the lower time frame, this New York session gap has also given up. So it's looking more positive that we are likely gonna go up on the dollar index and down on the euro. The same thing with the British pound. British pound is still trading inside the weekly fair value gap. Now on the flip side, British pound is a little bit different because on the weekly time frame, they've now managed to go above a down candle. Okay, they've managed to go above a down candle, but since the week has not closed yet, we are not gonna take that into much of a consideration yet until the week will close. Okay, so preferably, if what I'm seeing is right, then focus on euro for now. Okay, and then if British pound gives signs of weakening, it will start with this gap here. If it shows signs of weakening, then we can look for a sell. So probably wait for, if anything, something like this. Then if we pull back, then you can look for the sell. Okay, so stay away from British pound for now. Focus purely on the euro. All right, then let's see what the market will give us. Euro pound, I think we've traded into that weekly fair value gap, but this high to this low, the 618 level is somewhere down here, so I'm expecting a continuation to the downside, more continuation to the downside. So if I zoom in, we are coming somewhere here. Now on the H4, you have a nice fair value gap here. If price trades into it, you can look to sell to continue going down. Okay, so look there. If we pull back into that area, you want to sell short for a continuation to the downside. As far as the 0.87362 level, gold, I think we're supposed to go up today based on how we closed yesterday. Okay, based on the yesterday closing candle, today is likely gonna go up. They've also closed above the fair value gap, so this New York session, this down candle, not the best in the world because we couldn't move away a little bit. The wick comes right back down, even though it did close above it. But yeah, let me look at it on the 1 hour time frame basis. It's not strong enough. The 4 hour auto block here is not strong enough. Let's look at it on the so I would like to say long, but the fact that the market went up Monday, Tuesday, Wednesday, and today Thursday, long is a little bit risky. But if you want to go, I'll suggest to leave the stop loss below the New York session yesterday, this down candle here, because if you lose that, then definitely they will eventually go down. So if you're buying, you're gonna use that one, not this one, that one. Okay, and then expect the continuation to the upside. Now if we lose that, then definitely that will be the high. They might pull back into this gap here, this one. right? They might pull back into that one. If we lose this down candle, they might pull back into that. But based on the yesterday close candle, bullish is the way forward. The only downside to it is today is Thursday, so they could be forming the high of the week. But structure wise, upside is the way forward. So if you are buying, look for yesterday's high as a draw on liquidity, or instead of buying as it is, maybe wait for the New York session, the first 1 hour candle, which is the 2 o'clock candle. Do we close above the down candle? If we do, then aim for this equal high. That can be the safest way to go. You're gonna wait for something like this, then because this will then activate this as an order block, then you can buy and for this equal high. Okay, that'll be the safest way. Crude oil, not sure what we're doing, so I'm gonna pass on that. We come back to this when it makes sense. ES, I'm expecting another push to the upside today. This is just sideways retracement. We will expect another expansion to the upside today. I think with the expansion, they might trade to the monthly opening price, this level, 6877. They might trade to that, or they might just close in the gap here, 6853. So those two are potential upside objectives for now. So this New York section, you want to see maybe something like this, an immediate close, then you look for the long, then target 6853, and then the monthly opening price, which comes in at 6878. Okay, so that is that. Now let's move on to these pairs. Okay, so yesterday I spoke about price potentially rejecting this high and going down, but similar to euro, okay, from the weekly time frame perspective, we are bearish. We've closed below, so this is still a pullback, and they've taken out previous week high. So that up candle right there is an order block. So as it stands, that can be a trade idea, and expect price to reject and come back down. Now the down movement might not complete this week. It might do the rest next week. Okay, so maybe it might reject and come down maybe to the opening price, the up candle opening price, and then next week we continue going down because we don't have enough time of the week. We have auto blocks, fair value gaps, that price will pause. But yeah, I think with the previous week high being taken, this H4 auto block printed, this would be the best trade so far. I think all the currencies, euro doesn't even have that because euro did not close immediately below a H4 candle. If you go to the H4, we don't have an immediate close. British pound has something like that, but British pound is way too strong for you to look for the sell. Hence, this one is better. Dollar yen still hanging around that 50%, so that one too can be a good one. That one is also looking like maybe this week they might stay in a consolidation and then make a they're preparing the stage for next month, because that is, if we close like this, that is kind of creating a fair value gap within the month of November, and next month is going to open, drop in here, and then expand up. Okay, so they might probably not go up this week and stay as an inside candle. Then next week we open, we drop, take out the low, and then reject. So do I recommend longs on this? Probably not. Okay, probably not. From the way it's behaving, we only have 3 days, actually 1 day tomorrow. We only have 1 day to go, and then we only have 1 day to go, and then price will reset and open a new monthly candle. Hence, it's not advisable based on how it's behaving right now. Dollar Swiss, yesterday I was expecting them to continue going up. That didn't happen, but again, the weekly is still looking for higher prices. Now that might seem similar to the dollar yen, where the week is gonna close like this, next week is gonna open, they're gonna take out the low and then go up. So if you took a long and you got stopped out, just sit and wait. Don't do anything as it stands now on this pair. Let me take out all this, and then let's wait till next week, because from the looks of things, where we've closed below this down candle, chances are the up candle might resist price unless we break them, and we don't have enough. We don't even have news event strong enough to move price above it. Today there is an absence of news event, so just sit and wait. Dollar CAD, same thing. Dollar CAD has also come back down in a retracement. Now that is looking much better, because that has also engineered equal high, this high and that high, or last week's high. Actually, it's 3 of them, 1, 2, 3. So next week, this being roughly, for now, looking like an inside candle, they might take it out, and then that one. Okay, so again, is it bad? Not really. It's just that I think yesterday I spoke about it. Whenever they are going for a high, something like this usually happens. They engineer that, and I've seen quite a lot of that this time, or this year. I've seen quite a lot of them where you be in a trade, it gets very close to the draw on liquidity, which is a weekly high, monthly high, quarterly high. You get very close to it, and then all of a sudden price doesn't go for it. It just rejects and comes back down, then eventually going for it. Okay, it happens quite a lot. If you pay attention to price, you will see that it happens quite a lot. So when it's doing something like that, I'm really not panicking, or I'm not worried. The only problem is if you have a trade, obviously you will lose the profit, because I did have a trade from here, and now it came back and stopped me out at break even. I did have a trade here to go and attack that equal high, and then they've stopped me out at break even. So it's now just gonna offer me another cheaper price, because I bought the breaker here to go up there. So now that they're back down, it's gonna give me a cheaper price. Okay, so nothing to worry about. Now let's move on to the crypto market. So with the crypto market, I'm still not convinced we are going up yet. From the monthly perspective, like I said, unless we come back above this, what is happening now is not a reversal, it's actually a pullback, or maybe one distribution candle this week, and then next week they drop down one more time. Okay, so I'm not convinced that this is going up. from a high time frame perspective, which is using the weekly time frame, this is not a reversal. This is just a normal pullback that price will eventually resume. And from the daily, it's coming back to the last up candle here, so we expect another rejection to go down. Okay, so Bitcoin, we are still looking for lower prices. Ethereum, same thing, we are looking for lower prices. This is just a pullback. It's easy for them to drop it one more time. Solana, same thing, easy for them to come after rejecting previous week high. Yesterday I was saying this was easy for them to go down, but they've gone for that previous week high. Perfect scenario for a sell. Okay, in a down trend or in a down market, a run above a high is the best to expect a continuation to the downside. Sometimes it might come unexpected, like this one. I didn't expect them to do it, but when it happens, it's the best, because a run above a high simply injects more sellers, because most traders will place their stop loss above highs. Like I didn't even put the stop loss above the high, I placed it here because it's irrelevant to place it up there, because if they're gonna come for it, then they should take it here rather than there. Okay, if you learn how market moves, placing your stop loss above highs is not good, or lows is not good. It should be above the fair value gap or an auto block. So here, this last up candle, that is where the stop loss was, and expecting the fair value gap to hold. So if it doesn't hold, definitely the high is not going to hold. So why place your stop loss here? Okay, so with that rejection, I'll be expecting them to now drop down for the low. XRP, I think I've said it several times, stay away from this one because I don't like it based on this week. Hype is a good one to look for continuation to the downside. So hype, expect continuation to the downside. Maybe it might pull up a little bit more. Let me draw the range. It might pull up a little bit more to the 618 to the 70.5 level before a continuation to the downside. Then Chachki, I think we are now popping our head above the last up candle, which so far so good. Looking at how price is coming up, we are yet to close above it, so nothing exciting yet, but it's a good sign. Okay, from a higher time frame perspective, this is a good sign. Buyers are stepping in. From the weekly, it looks like we are turning around. Okay, so it's a good sign. Hence, gradually buyers are stepping in. Once we break this, even with today's candle, it looks like buyers are stepping in. Okay, now AI16, that's something that I would like to see similar on AI16. What is just happening on AI16 is what I want to see. Sorry, Chachki, what is happening on Chachki is the same thing I want to see on AI16. We are still inside that fair value gap, the midpoint of that fair value gap. Yesterday's candle was an up candle, so let's see. It's the first up candle in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days. In the last 9 days, we've now printed an up candle yesterday. So let's see if today can also print an up candle, which might be a positive sign for a potential rejection to start moving up. Okay. All right, so with that said, let's go back, look at the dollar index last time inside that gap. Watch here and let's see. similar to what I said yesterday to watch here. It did react from it. I was convinced they were going to close above that up candle, but they only took out their stops. Similar to what the high time frame Australian dollar is doing, right? In a bearish market, if they take out a high, it's going to follow through with a big drop because they're supposed to close above it. So with that rejection, so keep an eye on that, on this. Okay, so that is all I have for you for today. Thanks for tuning in. I'll see you same time tomorrow, Friday, last trading day of the month of November. And then next week, Monday, will be a new month, December. Now, December, I think I'll be doing the live session up to the second week of December. And then the rest of the month, there will be no live session because market will go a little bit quiet. So in December, we will do the first 2 weeks up to, let me say, up to the 13th of, sorry, not 13th, up to the 12th of December. Okay. From the 15th December till end of the year, I think the market, it will not be a good idea to be spending time chasing trades because market usually goes quiet for the Christmas period, or quote unquote there's going to be a lot of manipulation during that period because those with money are not sitting in front of the screen, so market will be moved around just to clear highs and lows. It's similar to when we get to August, June, July, August, right? The second week till the end of the year and the first week of January will not be a good idea. So between the 15th of December till end of the year, market will not be in good state. Therefore, we will resume back on the 5th of January. So from the 15th to the 5th, we break and we come back on the 5th. So last session will be on the 12th, between 15th to 19th, 22nd to 26th, 29th till 2nd. Those are periods that the market will kind of go quiet. Hence, I don't want to be hunting for trades. Okay. Now, the year has ended. Reflect on your whole year and then get ready for the following year. On the 5th of January, we will resume, but we will come back slightly slowly because even the 5th to the 9th of January, it's still going to be slow, but definitely we'll come back and start plotting on what the whole year has done, what the year forward is going to do, and then we'll go in fully back on the 12th of January, the second week of January. But we resume on the 5th gradually. Maybe we look at the high time frame between the 5th and 9th, only high time frame analysis. Then on the 12th, we can start diving into the lower time frames. Okay. All right. So keep that on your calendar. Our last session is on the 12th of December, and then we go on a break. Then we come back on the 5th. So you can all have a period of holiday with friends and family, and I also do the same. Then resume on the 5th. All right. So enjoy the rest of your day. I'll see you same time tomorrow. Peace.